Hello, I'm Marcus Brix with the CattleFax Closing Bell. Today's Closing Bell is sponsored by MS Biotech. Lactopro Advance from MS Biotech is a proven solution for feeding less hay, accelerating transition to a high-energy diet and reducing days on feed. Try Lactopro Advance, make a direct impact, accelerate, market sooner. Due to the partial government shutdown at the start of 2019, many USDA reports and publications were put on hold. Slowly after employees returned to work, offices like the Economic Research Service began to work to cover missing data from the shutdown. One of these mini reports was the Meat Price Spreads dataset, containing a glimpse into the retail price relationships between the major proteins, beef, pork, and poultry. Since the January report was not released initially, the February data release completes the 2018 price series. The December average USDA all-fresh retail beef price was reported at $5.59 per pound, about 5 cents lower than a year ago. Beef retail demand weakened in the back half of 2018, with fourth quarter demand averaging 3% below a year ago. January 2019 retail beef prices were 17 cents or 3% above year ago, averaging $5.73 per pound. Since January, per capita beef supplies are estimated to be near even with 2018. The price increase translates to a 1% year-over-year demand increase. While only a modest growth number, the result is more optimistic coming off of the weak fourth quarter numbers, especially a December with demand down 6%. Relative to a year ago, retail pork prices were down 1% in January, and retail broiler prices were up 2% despite breast prices holding flat. Keep in mind, retail beef prices today are already 1.5 times the price per pound of pork, and beef prices are 3 times the cost of buying chicken. Price spreads between beef and the competing proteins have been historically elevated since 2015, but have been on a steady increase since the beef demand lows in 1998. Only 2 events have broken the long-term uptrend in beef price spreads, the recessions in 2001 and 2007. Shoppers have grown more accustomed to paying a price premium to buy beef over pork and poultry since 2015, but that willingness to pay shrinks as disposable incomes fall. With economic indicators showing increasing risk of recession within the next 2 years, cattle producers should recognize the potential for demand loss. The cattle producer's share of the dollars being spent on beef at retail is already expected to be the lowest on record. This is not a comfortable margin environment for cattle producers today, and a recession would only make the fight for leverage even more difficult. Thanks for watching. Remember to visit CattleFax.com to become a member or see the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the volatility is extreme, the risks are big, but the opportunities for success are there. So how do you sort through it all to decide which way to go? For more than 50 years, CattleFax has led the way. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, our focus is you. We provide a direct line of contact with you, our client, to the CattleFax team, with our daily updated website, modernized mobile app, or the traditional phone conversation. CattleFax, the deciding factor. Become a member at CattleFax.com.